Welcome back, savvy investors, to Stocks Telegraph, your ultimate destination for the latest insights and analysis on the U.S. stock market. Today, we have an exciting lineup of hidden gems that are set to shine bright in the current market. We'll be uncovering the top 5 undervalued stocks with massive growth potential that you won't want to miss. But before we dive into this treasure trove of investment opportunities, if you find value in our content and want to stay ahead in the stock market game, do consider subscribing to our channel and hitting that like button to show your support. The search for undervalued stocks can lead to incredible rewards, and in this video, we'll explore why these 5 stocks have caught our attention. Our analysis delves into their strong fundamentals, positive growth prospects, and why they are currently trading below their true potential. So, whether you're a seasoned investor or just starting on your investment journey, these undervalued stocks could hold the key to massive gains in your portfolio. But enough talk, let's get started with our first undervalued gem. But don't forget, do your due diligence and remember that investing always carries risks. Let's kick off our exploration of undervalued stocks with a telecommunications giant that needs no introduction, Verizon Communications Inc., trading under the ticker symbol VZ. With a market cap of $138.984 billion, Verizon is a dominant player in the telecommunication industry, offering a comprehensive range of services, from wireless communications to internet access and television services. Despite its market leadership, Verizon stock has faced some headwinds, making it an intriguing candidate for undervalued status. Let's delve into the recent update and financial performance of this telecom behemoth. In its most recent earnings report for the second quarter of 2023, Verizon Communications demonstrated its resilience in the face of challenges. The company reported earnings of $1.21 per share, surpassing Wall Street's consensus estimates of $1.17 per share. Moreover, it generated revenue of $32.60 billion, although it experienced a 3.53% decline compared to the same period in the previous year. The telecom industry is known for its capital-intensive nature, and Verizon has been actively investing in the development and expansion of its 5G network infrastructure. This strategic move positions the company to capitalize on the growing demand for high-speed connectivity and innovative telecom solutions. Despite the recent challenges, Verizon remains a dividend-paying stock, with a forward dividend yield of 2.61%. This dividend yield could be an attractive factor for income-seeking investors. It's worth noting that Verizon stock has faced some selling pressure, leading to a year-to-date decline of 16.67%. Verizon Communications' strong presence in the telecommunications industry, coupled with its focus on expanding its 5G capabilities, could make it an enticing undervalued pick for long-term investors seeking stability and potential growth in the tech sector. Stay tuned, because that's just the beginning. Before we delve into these exciting opportunities, we'd love it if you hit that like button and subscribe to our channel. Our journey through undervalued stocks continues with a titan in the energy industry, Exxon Mobil Corporation, trading as XOM, with a substantial market cap of $433.084 billion. Exxon Mobil is one of the world's largest publicly traded oil and gas companies, with operations spanning the entire energy value chain. Let's dive into Exxon Mobil's recent financial performance and why it might be considered an undervalued gem in the current market. In the second quarter of this year, Exxon Mobil demonstrated its resilience and adaptability to the dynamic energy market. The company reported earnings of almost $8 billion, a significant achievement compared to its performance in the second quarter of 2018, even with comparable oil and gas prices. Chairman and CEO, Darren Woods, attributes this success to ExxonMobil's strategic efforts to reshape its portfolio of businesses, invest in advantageous projects, and drive higher levels of efficiency and effectiveness. While the energy sector has faced fluctuations due to various economic and geopolitical factors, ExxonMobil's diversified operations and continuous focus on optimizing its projects have allowed the company to navigate through challenging times and emerge stronger. With a price-to-earnings ratio of 7.25 and an earnings per share of 14.77, ExxonMobil appears to be undervalued relative to its earnings potential. Furthermore, the forward dividend yield of 3.41% adds an attractive incentive for income-oriented investors. ExxonMobil's commitment to energy innovation and sustainable practices also aligns with the evolving landscape of the industry, making it an intriguing long-term investment option. The surprises don't end here. Keep watching as we uncover more undervalued stocks that could change the game for your investment strategy. Let's embark on a thrilling journey through the world of undervalued stocks as we set our sights on a true titan in the e-commerce and technology landscape, Amazon.com. known by its ticker symbol AMZN. With a staggering market cap of $1.323 trillion, Amazon is a dominant force in the online retail industry, as well as a leading player in cloud computing through Amazon Web Services. Let's explore Amazon's recent financial performance and why it might be considered an undervalued gem in the current market. In its latest earnings report, Amazon exceeded Wall Street's expectations, showcasing its ability to deliver growth and innovation across its business segments. The company reported impressive sales growth and profits, attributed to its efforts in optimizing logistics, providing faster and more cost-effective deliveries to its vast customer base. One of Amazon's greatest strengths lies in its cloud computing division, AWS, which has established itself as a leading player in the global cloud services market. Despite facing competition from tech giants like Google and Microsoft, Amazon continues to innovate and expand its cloud offerings, drawing a significant customer base and showcasing its technological prowess. In the retail sector, Amazon has implemented strategic measures to enhance its fulfillment network, enabling same-day shipping and proximity to major metropolitan areas. These initiatives have resulted in improved delivery efficiency and cost savings, further solidifying Amazon's position as an e-commerce giant. As the world increasingly relies on e-commerce and cloud services, Amazon's vast technological infrastructure and extensive customer reach continue to be key competitive advantages. With a price-to-earnings ratio of 306.93 and an earnings per share of 0.42, Amazon's valuation might raise eyebrows. However, it's essential to consider the company's growth potential, relentless innovation, and strong positioning in the market. Our search for undervalued stocks brings us to the energy sector, where we find Valero Energy Corporation, trading as VLO. With a market cap of $45.407 billion, Valero is a major player in the oil and gas industry, primarily engaged in refining and marketing operations. Let's dive into Valero Energy's underlying trends and why it might be a hidden gem with significant growth potential. When seeking a stock with long-term multiplying potential, one key aspect to analyze is the company's returns on capital employed, commonly known as ROCE, a measure of how efficiently the company is utilizing its capital to generate profits. Valero Energy stands out with an impressive ROCE of 33%, surpassing the industry average of 22%. The most intriguing aspect is Valero Energy's remarkable growth in ROCE over the last 5 years, which has surged by a staggering 200%. What makes this growth even more remarkable is that it occurred while the company maintained a similar level of capital employed. This indicates that Valero is becoming a compounding machine, continually reinvesting earnings at ever higher rates of return. The company's ability to generate higher returns from the same amount of capital showcases significant improvements in its operational efficiencies. As investors, this type of trend is particularly encouraging, as it signals management's successful execution of strategies to enhance profitability and generate value for shareholders. Furthermore, Valero Energy has rewarded long-term investors with a respectable 40% return over the last 5 years. This performance highlights that the market is starting to recognize the company's potential for future growth and success. With a forward dividend yield of 3.14%, Valero Energy also offers an attractive dividend to investors seeking income. As we continue our journey in search of undervalued stocks, stay tuned for our final pick, where we aim to uncover another hidden gem with tremendous growth prospects. Our final selection for undervalued stocks leads us to the financial sector, where we come across Citigroup Inc., commonly known as C. With a market cap of $88.987 billion, Citigroup is a global financial institution, offering a wide range of banking and financial services to its clients. Let's delve into Citigroup's recent dividend announcement and explore why this financial giant might be an undervalued gem worth considering. On July 20, 2023, Citigroup's board of directors declared a quarterly dividend on its common stock, amounting to 53 cents per share. The dividend is payable on August 25, 2023, to stockholders of record on August 7, 2023. Additionally, the company also declared dividends on its preferred stock, offering attractive yields to investors seeking income. Citigroup has a forward dividend yield of 4.45%, making it an appealing choice for investors looking for steady returns. The company's commitment to rewarding shareholders through dividends reflects its financial strength and stability. As we evaluate Citigroup's valuation, we consider its attractive price-to-earnings ratio of 7.32 and earnings per share of 6.31. These financial metrics indicate that Citigroup's stock may be undervalued compared to its earnings, making it an intriguing investment opportunity. Furthermore, Citigroup's broad range of financial services and its global presence provide significant growth prospects. The company's strategic positioning in the financial market gives it the potential to capitalize on economic growth and financial activities worldwide. In light of Citigroup's dividend payouts and strong financial standing, it's worth investigating what the future holds for this financial powerhouse. As investors, exploring potential catalysts that could drive the company's growth and profitability is crucial in determining its long-term investment appeal. With a dividend payout date around the corner, investors should closely monitor Citigroup's performance and consider the company's position in their investment portfolios. As we conclude our journey through the world of undervalued stocks, we hope you found value in this analysis. Remember, conducting thorough research and due diligence is essential when making investment decisions. Thank you for joining us on Stocks Telegraph. If you enjoyed this video and found it helpful, don't forget to hit that like button and subscribe to our channel for more insightful content and updates on the stock market. Stay tuned for our next video, where we'll uncover more exciting investment opportunities. Happy investing!